Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are just after market close on Friday, October 22nd. We're going to take a look at SoFi. We'll start off with the intraday here. Now, SoFi coming up and bounced right off our 2058 level. Is that the level that we have charted there? Well, whatever it is, it's right on it, so I can't exactly see it, but I think it's 2058. And tried to make a run up this morning, right? Did this nice little... We've seen this happen before. This nice little reclaim and then test and go. And definitely on other days that would have gone, especially on this retest. And when it looked like it had a nice big green candle there, that could have potentially faked a bunch of folks out. And, any of these sort of patterns or trading strategies around indicators, even, supply and demand and stuff like that, trend lines, they are meant to give traders a better than chance opportunity, a better than guessing, a better than a flip of the coin opportunity to read the price action, but nothing is foolproof. And this sort of proves that, right? I think on many other days, especially this one, boom, would have been the outcome. But we also know that SoFi is often been plagued on Fridays in general, and so that is certainly nothing new. But it tried really hard to hold and then just flipped it to resistance, and then it tried to catch the 2058 that we had on the chart, and that just also fell apart. And then came down to this 2020, which we'll talk about in a second. Came up, tried to both test the VWAP, but also grab support, and then 2058 got shoved down, and then was able to reclaim later in the day, but then just chopped around by the VWAP, which we've talked about before. Looks to me like it's just algos taking out a bunch of buy and sell orders at that point. Certainly a nice move here, but in any case, obviously all of this area here looks on the intraday like it's in no man's land. We talked the other day about looking at the Ichimoku cloud when things kind of seem to be in no man's land and it seems uncertain, where in the world the price action is going. Now, if you look here, the golden conversion line crossing above the yellow baseline is a buy signal. Now, when it's below the cloud, it's considered a weak buy signal. And so if you had caught this, you certainly could have run up quite nicely. Maybe you caught it like 2041 or so. And so it, had a promising-ish run up there, but then fell back through it, caught a sell signal there, right? Crossing back below, and then just kind of chopped around the cloud, dipped a bit further, and then caught another buy signal right here that then just kind of waffled. And then here is the best buy signal, far and away. The price action is above the cloud. The conversion crosses above the base. That's a buy. That's a strong buy signal with the price action above and this crossover. And that's where the ride would have taken you from, maybe you got in, just say, maybe you got a poor entry, 2150 even. You could have, or sorry, 2050. You could have ridden it up to, 2075, and then we get this weak sell signal here, and then it just kind of chops around. So, there just wasn't a whole lot of range today to catch a bunch of really interesting intraday movements. It just kind of stayed a little too tight in, and certainly not to the bull side anyway. But this is just to say, again, just keep in mind, as you're in no man's land, if you didn't have areas plotted that corresponds to where the price action seems to be moving at any given day, Ichimoku cloud might be something to look at because these clouds are helpful for additional support and resistance along the way, and they do stretch out into the future. You can't really see it now. I mean, it's not perfect, but it's in aftermarket hours, but these stretch out in the future. That's what I like about them. They aren't just sort of like at the point of price action. They aren't lagging behind. They are sort of they have a leading element to them. I'm not saying that they're predicting the future, but it gives you a leading idea of how big the support and resistance is ahead, and sort of where some support and resistance zones might be. For example, if this cloud would have been here when the price action was back here, for example, right? And so when this came in, you would have looked and could have this would already be here, these zones, and this obviously caught it as support here, right? It didn't fall through the cloud and then end up in a bearish situation. So again, nothing is perfect, but to the extent to which you feel like you could use more tools, because too often you're left sort of like grasping at thin air when you're in these areas where you don't have clear price points, targets to be looking at, could be something worth taking a gander at. But folks have different things that work for them, so just find what works best for you. Now in the daily, this is starting to look quite nice to me. I haven't changed any of my positions, and I took on new positions this week, and I have positions that I've had for a while. I have leaps, I have commons, I have call options just after earnings dates, and all this kind of stuff. And I know that there's a lot of like folks out there just the bottom's gonna fall out, they're gonna rug pull SoFi, and I mean, anytime a stock runs up, folks just start saying that, and why they think that is always sort of like flimsy, or is often flimsy. It's sort of like, it's gone up so much, or they want it back to $16, they want it back under 18, whatever it is. But to me, this is still looking quite nice. This isn't going to do us a lot of help at the moment, I don't think, because I'm just going to talk about things that we've talked about previously. So I grabbed TradingView, which if you're not familiar with TradingView and you're looking for something to chart on, you can use it for free, but they serve you ads. There is also a paid version, so I don't know if you want to pay. I mean, Webull, if you like this sort of layout, this is free, of course. But TradingView is sort of like a pretty solid standard. And I'm going to be looking soon at Trading Spider. I could be butchering that. But at using their tool, because they might have some interesting elements that others just don't have. But in any case, TradingView, I pulled up this view of this flag that it's putting in, right? So here's the pole of the flag, and then here's where the price action is kind of settling in at the moment. So, where it's going to break, I mean, oftentimes this is obviously seen as a bull flag, but it could break. I mean, to the extent like any sort of indicator or pattern could go the opposite direction, right? Because again, they're not 100% indications of what's happening. They are giving you, more often than not, a better than flip of the coin opportunity to try to understand what's happening and where things are leading to. So this, I think, is what's most interesting at the moment. This flag that it's putting in, and it's obviously at some pretty key levels here. If you see where this draws back over here, right, there was some pivot points here where we had resistance that flipped to support, retested support, retested support, retested support, and then flipped to the downside. So it's fighting a pretty obvious key critical area. That's reflected here in just a mess, because there's so many things converging at the same point. That's why there's so many stinking lines on the chart, is because this is a very thorny zone, right? When you see these strong nexus points of all these converging trend lines and supply and demand zones and what have you, those can just be quite sticky and quite challenging. And sometimes things can move, sideways in them for a while before they pick a direction. But, if this flag holds up, then it would sort of like need to push out of here at the latest, like about a week or so before earnings. So like the 5th of November, so 4th, 5th of November. So we'll see what happens. But again, it was a Friday, but volume kind of dying down a bit low on this red day. So we'll sort of see what happens. Volume's certainly still trickling in, but right now we're under 20 million for sure. We're under 19 million the moment, but we might get closer to 20 once sort of all the trades are counted. SoFi, quick check on the data here. Now we're getting, we're close to 40% in the last month to the upside, still upside, return potential per analyst consensus price targets. And the shorts today, again, mostly what we've been seeing over the course of the week. Days to cover, is that creeping up a little bit? Days to cover, yeah. Days to cover is creeping up, so that's something to keep an eye on. And this is, close enough to 10% to certainly continue to keep an eye on. So those are what I'd watch, especially if both of them continue to move up together. That would be something to certainly be aware of. So you see up 3.56% from 7 days ago on the days to cover, and then up 1.29% on the short interest percentage of the free float today. All right, folks, so I think that'll do it. So I hope that your trading week ended off well and that you enjoy the weekend ahead, and I appreciate you watching. I will see you in the next video.